Hello, good day, guys. My name is Nick, technical analyst with Tradex, and today we're looking at the analysis on the currency pair United States dollars to the Japanese yen. And first, we'll be talking about fundamental analysis, and then we'll move down to technicals, which will be purely what we'll be seeing on the chart. Now, we can say that the Asian Forex and stock markets have been having some gains, some ground as the dollar slid to a 4-month low on the Trump tariff relief. Now, most Asian currencies firmed on Thursday, while the dollar wallowed at 4-month lows after the US has offered some conscious concessions in recent trade tariffs against Canada and Mexico. But we're seeing that sentiment will refine some fragile move as United States President Donald Trump has made no exemptions in his 20% tariffs on China, drawing island and retaliation from Beijing. Now, investors are digesting promises of more stimulus measures from China made at a very high level government meeting this week, while focus will also come on key upcoming US labor data. Now, the Chinese yuan has firmed slightly, while the Japanese yuan has steadied after logging strong gains on safe haven demand. Now we have risk-exposed Asian currencies such as Australian dollar and South Korea won strengthened. And this, of course, is having some shape on the market because at the time we have dollar at 4-month low tariff on concessions. Payrolls are weighted. Of course, the dollar index and the dollar index futures steadied in Asian trade after sinking in early November lows on Wednesday. Losses in dollar came after Trump made a 1-month exemption for U.S. automakers from recent tariffs on Canada and Mexico. And we have seen that reports have showed that Trump was also considering exempting agricultural goods. Markets are now awaiting more cues on the U.S. and interest rates with key non-farm farm payrolls data for February due tomorrow, Friday. And we are seeing more signs of persistent strength in the labor market and the Chinese yuan firms on strong fixing stimulus. So for the short time, we are currently seeing a very important move. This is a very significant move. We call this a ranging chart, series of up-down movements. So with this, we first mark out our important trend lines on support. And we pick another one. We mark out where the market currently is. Pick the last one and mark out the last support. And then we mark out another support at this point. So we have two supports, one looking at the break here, and we have a very important resistance at this point. So now we go back again and we look for our trend line, and we mark like this. And then we pick the second one and we mark it way below what we're seeing here. So if this happens to break out from this trend line, we are going for a long position up to this very important resistance at 150.13. But if it doesn't happen that way, we are looking out for a retracement down to the support, which is very, very imminent considering the current position balancing on a very important resistance zone. We're looking at a retracement down to the support at 148.414, which is totally what everyone is predicting is going to happen. Between this point and this point, we're looking at racking about 100 pips from this point to this point. 100 pips, of course, which is good money. And that's our technical analysis on today's currency pair, the United States dollars to the Japanese yen. I remain your host, Nick. Bye for now.